Now to our top story. Apple exceeded analyst expectations in its fiscal second quarter earnings report, but the company posted its first back-to-back drop in quarterly profit in more than 2 years. Shares of Apple rallying right now, though, up well over 6% there on Yahoo Finance's Brian Sozzi joining us to break down the numbers. And Brian, we've heard Tim Cook try to pivot to the services side, but we know this is still a hardware company at its core. That seems to kind of be concerning some investors in terms of the numbers we got there.
Hey, Kiko. Well, Apple's also pivoting towards a very bullish outlook for the next 12 months. Tim Cook went all in on that conference call. He said China, that business is troughed, and that things are starting to turn the quarter. Certainly you saw strong growth in the wearables business. On the iPad was left for dead, but the sales have come back strong there too as well, driven by the iPad Pro. Now, overall, I think Wall Street does remain a little concerned about the profit margins for this business. A large reason why sales came back to the extent they did globally is because Apple got off its high horse and cut the prices on a lot of its products.
Okay, thanks for that. Brian Sozzi there with the latest numbers on Apple. We are joined by today's panel here in studio. LendingTree's chief economist, Tendayi Kapfidze, and Yahoo Finance's Scott Gamm, also with me here at the desk. Also joining us from Minneapolis is Loup Ventures managing partner, Gene Munster. Gene, it's great to have you on. Let's start with you there, because I heard you say that you think Apple could be as high as $350 in the next couple of years. No secret, you've been one of the biggest bulls when it comes to this stock. Has your view changed with the numbers that came out yesterday?
Really little has changed. And I think if I look at the broader analysis across Wall Street today, I think that there is a critical missing piece specifically about how to value, what's the proper multiple to put on this company. And the key distinction here is that investors typically think of this as a hardware business, understandable given that 80% of its revenue is hardware. But keep in mind is that 35% of earnings are services-based. And over the next few years, the company is progressively going to start to sell its hardware as a service. Think of the iPhone upgrade program extended to other devices. So if, in fact, the company does go down this path, I think you could see a re-rating of the multiple. And this 70% plus kind of upside that we expect in the stock over the next couple of years really assumes what we think is a consumer staple. It's a Coca-Cola 22 times type of a multiple, and that's where Apple's ultimately becoming. And so this debate is going to rage on. Is this a hardware company or a services company? But I think it will evolve over the next few years as more of a services company as they sell their hardware as a service.
Hey, Gene, Scott Gamm here. We're all excited about these services growth in the Apple story, but doesn't that eventually hit a wall if you're not growing that core iPhone business? Aren't the two kind of inextricably linked?
They are linked, and I think at the end of the day, the hardware piece is probably going to be a steady, if you look at their hardware in aggregate, probably a 5% grower with the new devices. But keep in mind, a lot of these devices that are used get repurposed into other markets, typically emerging markets. And so what you're seeing is the active installed base at the end of last year grew at 8%, even though the hardware units were closer to flat or up a couple percent. And so, yes, they are tied together. And our thesis about them becoming more of a service company is predicated on them kind of maintaining and slightly growing this, call it, billion per month active users. But we think just given their products and how their products are working more closely together, and just in general how people are wanting their products, their hardware products, to be more interoperative, I think that the company is well positioned to, in fact, do that, to grow its base.
Gene, I heard you point out that you don't view this stock as a hardware stock or a hardware company, and yet we have to look at the iPhone sales because a majority of the revenue for the company comes from that. On that front, there were some concerns in Greater China. We saw sales down 22%. This at a time when we've seen Huawei increasingly move in on their market at a higher-end phone, but a slightly lower price as well. Catalyst out with a report that shows Huawei has been the biggest beneficiary of some of the declines from the iPhone. How big of a concern is that for you? And how do you view some of the headwinds Apple is facing in the Chinese market?
So they are headwinds, no doubt. I don't think that they're structural. In other words, I think that they will, in fact, work through those. Let's just take a step back and look at what happened in September. The company in their China business, the iPhone was up roughly 20%. They don't break this down, but you can back into this number. In the December quarter, this is the quarter that they pre-announced, that the China business was probably, iPhone business was probably down 40%, 40. And I think what had a profound impact on that was largely underreported was this social campaign against Apple around the trade war and some of the things that were happening with Huawei's CFO in China, for example. There was a boycott Apple campaign that went on. Tim Cook loosely alluded to that yesterday, talking about the trade war starting to soften as being a positive to their brand. And as we kind of think about that trough that Brian had in his setup piece here, the down 40% in the March quarter, it probably was something like down 28%. So it is showing a recovery. But let me answer your question is, how do we think about China more broadly for Apple? Is that the company's going to have to continue to do what they started to do in the March quarter, which is experiment more with pricing. Now, they have a little bit more of a luxury to do that now that they're not no longer disclosing their units and ASPs. Some investors undoubtedly will say that's a sign that they can't maintain their competitive edge. But small changes in pricing can have measurable positive impacts on the overall unit growth. And we saw this impact on pricing. Let me just try to quickly put it into perspective, is that margins on hardware were down 2% versus the December quarter, and services margins were up 2.5%. So that's probably, to stay competitive in China, what they're going to have to continue to do is give a little bit on the pricing to get a little bit more on the services.